Dr. Kaufman, you earned the nickname Dr. Doom for your pessimistic views, but often correct ones on inflation and interest rates in the US in the 70s and 80s. How concerned are you about inflation becoming an issue again?
Well, you know, I've always felt that if you're in the financial markets, the critical issue is what you perceive will be rather than what should be. And so I perceived some serious problems in the 1970s and early 80s, and market participants or government people don't want to hear negative views.
Right.
And that's how that appellation came about.
Yes. Do you like it or not, or
no?
How do you feel about being known as Dr. Doom?
I don't like it but I understand it because business people don't want to hear a negative view. Government people don't want to hear a negative view. Those who lead financial institutions don't want to hear a negative, mainly because it inhibits their aspirations over the near term and what they want to achieve. Let me turn to the issue of what I think will be ahead. We're not in the inflationary period of the 1970s. We're not talking about that at all. People have forgotten what really upset me in the 1970s, early 80s was that we had inflation where consumer prices were increasing at an annual rate of 15% a year, when the prime loan rate in the United States reached 21.5%. Long government bonds 15.25%.
Right.
We're far, far away from that at the present time, and that's not what we're talking about. The risk that I always fear is that when you destabilize a financial system, you destabilize the middle class, and you run the risk of drastic political change. Now that reflects a little bit of my background because I came from Germany originally, and I remember that my grandfather telling me about hyperinflation and hyperinflation. We're not anywhere near this. We're not going to go anywhere near that. Yes, there is some increase in the inflation rate going on, and that, I think, ultimately will be dealt with.
Right.
And it will not change the role of the United States. The United States will continue to be the dominant power financially, the dominant power economically, the most stable democracy in the world. Yes, we may lose some relative standing, but for the time being, we'll still be the most dominant.
So, in terms of the dollar's status as the main currency, that is still not under threat.
It's always raised when the dollar is under pressure, as it has
Yes.
been here, and the dollar has weakened. The initial weakness of the dollar is improving our trade situation. Not as much as we would like, but it's improved our exports. But so far, there is no evidence that holders of dollars abroad are disgorging U.S. dollars and buying assets. They're buying some other assets, but they're still buying a lot of U.S. obligations. That's understandable. There is no immediate substitute for the dollar. This has to be understood. Some people talk about the euro being a substitute. But the euro, what has it got backing it? A central bank, but it's not a unified political system.
Right.
It's there's a big difference. And until Europe becomes more of a federalized government of the kind we have, with its unity, I don't think we have too much to fear that the euro will be a U.S. dollar substitute.
Right. Thank you very much, Dr. Kaufman.
Okay.